Welcome, everybody, to episode 39 of Crossing the Line with Greg Heym. I am the aforementioned Greg Heym. Glad to be with you as always. This week we have Lisa Ray Castrigno with me.
Hi, good morning.
Are you excited to be on the program again with me?
Absolutely.
You better or you'll be fired. All right.
I figured that was the right answer.
Yes. You know the old joke, can't ask for a better boss because if you did, he'd fire you. So
Okay.
I'm not saying that right now, but...
So just tell me what I have to say to stay employed. Because I'm doing a basement, so I need
get
to
the
stay
ratings
employed.
up. That's the important thing.
I told you, I send this out to my whole big Italian family, so...
Yeah, if any of them knew how to use social media to help promote it, that would be helpful. That's okay, because Trig knows we love you anyway.
Listen, Lucy will get mad at you.
She can never get mad at me. She loves me too much.
She questions your Yankee status.
Yeah, I root for the team that wins. Yeah, that's something to question.
Yes, but she didn't know that you were a Yankee fan. When she found out, she was a little upset.
She should have known. You can't say I'm smart and I know everything and then be surprised that I'm a Yankee fan. They all go together.
Yeah, okay.
All right, so it's September 16th today. How was your weekend, Lisa?
It was actually really nice. My nephew turned 18 on Thursday, so we had a big family party. I still can't believe it. He's 18, because I still remember when he was born.
For the viewers and listeners out there, they could have had his 18th birthday party at my gig on Thursday, but they chose not to.
Well, the birthday boy picked the restaurant.
He didn't know. You probably didn't give him an option. Thomas would have done it. All right, that's all. So I had two great things happen this week, and one, the Jets won. So you got to celebrate that.
Yes.
You don't know when it's going to happen again. Even though they beat not a very good team, but we take it. We don't care.
Now you take all the wins.
And I went to see Blazing Saddles in the movie theater last night by myself. They're re-showing it. This is a big thing now, apparently, where you take classic movies and re-show them. It is the 50th anniversary of the movie.
Oh, that's right. You had said. I forgot. I forgot that.
I think the funniest movie ever made. I think the jokes per minute are unsurpassed by anything else I've ever seen. A lot of people must say it's inappropriate by these days, but I would just say those people probably haven't seen the movie, because much like All in the Family and a lot of those other shows, the joke is on the racists. You know, it's a whole town of people whose last name is Johnson. I mean, that's and the hero is Sheriff Bart.
That's right. I remember Howard Johnson serving one flavor.
Yeah. So it is real funny, and sometimes you need to laugh. And when you're in the theater, you're paying full attention to that. You're not on your phone.
Was it crowded? Were there a lot of people?
People there, yeah. It's like my second favorite movie of all time, probably next to The Godfather. So you get a chance to see. Godfather's too long to sit in a theater, but this is only like an hour and a half. So
yeah, but Godfather's a classic. You can't beat a classic.
Blazing Saddles is a classic. Comedies are classics, and they don't make them like that. And it's sad watching it, because all of the stars in the movie have died, except Mel Brooks, who's still very much alive at a very old age. So, great movie, and it was a lot of fun. And I couldn't. My wife and son went to see a horror movie instead.
Oh, what?
I don't know. I stopped. The last horror movie I think I saw in the movie was like Halloween 3 or something. I don't know. Anyhow, as always, we got Ray and Lena here.
Yay.
We still can't get Lena to clap. I don't know. Maybe we got to.
She has a higher bar than I do.
Okay, well, that's good to know. We'll try to step it up a little bit. And as always, coming to you from Studio 1873, located right outside my office, and as always, decorated by our good friends at the Everset.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
All right, we're back. So let's get going on our line items, because, we steal from my blog. I don't like to do things more than one time, so we just take this. We had a couple jokes, and we get a podcast. It's perfect. So what was the big story last week?
Oh, your favorite. So it was mostly good news that the PI brothers showed up. So your CPI and
PI
your
brothers,
PPI.
copyright, Greg Heym Enterprises. You're not allowed to use that without my express written consent.
Okay. So we'll stop saying it, or we have to, leave a quarter?
No, you
in
can
your
say
office?
it because you're in here, but other people start saying it could be a problem.
Oh, okay. So you want to share the news with everybody?
Yeah, I'm sure most people have heard this, but we'll go over the basics again. CPI, headline CPI, up 0.2% last month and 2.5% higher than a year ago. Sounds like really good news, right? We want to get to that 2%.
Right, it's going in the right direction.
Both those figures are pretty much exactly what was expected. The 2.5% annual growth rate is the lowest level since February 21. The good old days before inflation, was running rampant.
Ran amok.
So that's good. So why is inflation moderating? I don't know why that's a term they always use, moderating. I guess you have to remember that the fact that the number is positive means prices are still going up. This is disinflation when the rate of growth slows. Deflation would be if prices were going down. And unfortunately, that's not happening, except the most noticeable is in energy prices. Down 0.8% last month and 4% lower than a year ago. So that's helping keeping that headline number down. Now, core inflation, which the Fed looks at more closely because it's less volatile, we take out food and energy prices. We've seen, just think about your summer and even the last couple of months, like what's happened to gas prices. They fall dramatically, then they rise again, they fall, obviously with the war going on in the Middle East and, other things. It's a very volatile thing. And we're funny, it's going down right before an election. Coincidence? We'll let you at home decide. So excluding the food and energy prices, core inflation was up 0.3%. That was a little bit higher than expected, and 3.2% over the past year. So 3.2% core, 2.5% annual rate for the headline number. What does that mean? Not much, to be honest. And we'll get into that. Obviously, the final say on inflation is the core PCE index, which comes out the end of next week. That's the one the Fed puts the most stock in because it's the most accurate. But what's still driving this rise in prices, for the longest time now, it's been housing. Housing costs up 0.5%. See, I'm getting into fractions early on a Monday. It's dangerous.
Throws you off a little.
And 5.2% higher than a year ago. But as we've noted before, there's kind of this crazy way that they measure housing inflation. And they basically look at the same groups of homes in 6-month intervals. It's like, come back and we'll ask you in 6 months how it's going. So there is a delay in this number coming down just because of the methodology used and the way the surveys are conducted. So this is a good report. The only thing you point out is the monthly increase in the core number was a little higher than expected. But, that got people a little worried when this came out. And I said, oh, no, we're not getting our 50 basis point cut. The odds you get now were very low to begin with. But things calmed down by the end of the day. And, Wednesday stocks finished up. People calmed down. It's, you can't always get what you want. But if you try sometimes, you just might find out. You get what you need.
It always segues right into some musical lyric. See? And then I sit and go, I have no idea what song it is.
How could you say that phrase without,
and the artist.
without thinking of the Stones song? I mean, come on. That's. I'm not even the biggest Stones fan, but that would be wrong. Then the next day, little brother PPI shows up. Very similar. The headline numbers exactly as expected. Core PPI up a little bit more than expected on a monthly basis. Not a big deal, unless PPI says something, really out of the ordinary or contradictory. Nobody really pays a lot of attention. The whole idea behind producer price index is that if producers are paying more for goods and services, they're going to pass that on.
It goes right to the consumer.
Right, and that would be us and you at home and Ray and Lena. We're all consumers. We live to consume. So that's why, obviously, it's important. It's kind of a leading indicator to consumer prices because as that stuff filters down and we're paying more for everything except energy. So that's good. So what is the big takeaway based on this information? Unless something dramatic happens, and the only piece of data coming out before the Fed meeting, which we'll get into in part 2 of Crossing the Line this week, unless retail sales show something really unexpected and crazy, they're going 25 basis points, in my opinion. Because I just don't see. I mean, retail sales is important because consumer spending is about 70% of GDP. And GDP is obviously how we measure economic growth.
And retail sales have been trending up, if I'm...
A little bit.
Moderately, but trending up.
I think the thing that surprises everybody, even to this point, is that people are still spending at the rate they are when, we've dealt with higher prices for several years. Wage growth is slowing. Wages are still going faster than prices, so that's good from that point of view. But the credit card debt people have and the rates that they're paying, it's remarkable that the consumer is that resilient. But you can't count them out, and that's good.
No, in certain things people have to have. Your certain basics are...
And unfortunately, as we point out, the two biggest drivers of inflation have been housing and food, which are things that are the most basic essentials.
It's necessities.
That we need. So just remember... no matter what the Fed does, let's say they do cut 25 basis points. Keep in mind two things. If you say it should be 50, remember this. No matter what they do, it typically takes a year or more for it to have any real impact on the economy. So whether they go 25 or 50, it isn't like is going to be there'll be a noticeable change if you go 50 in some of the rates that will adjust immediately, like credit card rates and things like that. But it's not going to all of a sudden make the economy take off like a rocket and we're all going to be happy. So with that lag time, they if they want to do it in smaller, cuts more times, this way they have a little more control, it may not be the end of the world. And also, as we point out way too often on the show, but we need fillers sometimes if we're going short. If they do cut this federal funds rate 25 basis points, that does not mean that mortgage rates are going to go down by 0.25% this week or next week or any week. It doesn't mean anything directly for long-term mortgage rates. It's remember that if I'm going to lend Lisa money, and I guess I might do that, over 30 years, I'm going to charge her a premium if I think the economy is going to do well and we're going to have inflation, because over 30 years, it could change a lot. We've saw for most of the last 2 years an inverted yield curve where actually short-term rates were higher than long-term rates. That was good from a sense that our savings got a lot higher rate of return. But now the yield curve is in its correct shape, upward sloping. The longer you're going to borrow money, the higher rate you should pay. But now, anytime there's a change, they say, well, that's typically a sign of a recession. Like an inverted yield curve is typically.
I was going to say,
but it's not a perfect one. It's not like the Somme rule, which we all get scared over. So remember, mortgage rates, and we're gonna start the next segment with this. Move up and down almost on a daily basis, pretty much sometimes on a daily basis, no matter what the Fed does. And the Fed has not done anything since July of 23. So just keep in mind that there are greater forces that impact long-term mortgage rates than what the Fed does with an overnight rate for loans from banks to banks that they don't even use anymore.
Right, because rates are down over the last 6 weeks, I think 50 basis points, and the Fed hasn't done anything.
Don't tease. That is true. Yes, and the Fed, see what happens? This is why people don't want the government involved in many things. Sometimes it just runs better when they do nothing and let the
markets take care of themselves.
Well, that's how economists think, most of us anyway. Some do not. All right, well, that's part one of the show. So we'll be back with part two after this very important message.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
And we're back. And we're excited to be back.
Yes.
it's funny because, we don't actually sit and watch the commercial. So we just have to say, how long do we actually sit here until we start again? And then we tell Lena to hit the clock again so we know we are. By the way, for those of you watching, anytime you see me look up, I'm not spacing out. I'm looking at the clock to make sure we don't run too long. And thank you guys for putting in an easier, because we used to have it like in a corner. Thanks, Ray.
The easy read clock?
Well, we used to have to make Lena jump up and down and say 10 minutes kind of thing. Those are the fun days. All right, so as Lisa teased, we're starting part 2 here with mortgage rates, and you already said that they fell.
Yes.
So, by 15 basis points. And again, Fed did nothing. Lowest mortgage rates, 30-year mortgage rates since February 2023. Now, February is the greatest month of the year because my birthday isn't.
Yeah.
That's why.
Except for those of us not born in February. Though my mom is, so I do have to say the beginning of the month is fabulous.
That's why they had to make it shorter than the other months because only special people could be born in February.
Yeah, Lucy.
So if you look at it since the beginning of August, rates have fallen basically 0.5%, which is really good. And to go back a little further to October, almost a year ago, mortgage rates then were peaking at about 7.8%. Rates are down 1.6%. So, we joked about this with Scott Nadler in the last podcast that these people keep saying, I'll wait till it gets here. Well, it's there. 6.2% now. Could be less today or whenever you're watching
this. Timing mortgage rates is like trying to time any market.
That is correct.
If you're ready, buy.
Yeah, and so obviously the rates are coming down, and we expect them to come down more. The inflation numbers are moving in the right direction. So does that mean, Greg, that I should just wait? No, actually. Depending on where you're looking to buy and what you're looking to buy, remember a couple of reasons why you could actually cost yourself money by waiting. Number one, inventory is up sharply over the last year in most parts of the country. But most of them are still sellers markets because inventory is still below that level where they would say the buyers are in control. So certainly more inventory than you had a year ago, but it doesn't mean, that it's a high level of inventory from a historical perspective. The lower rates that we've seen over the past couple of weeks especially are getting buyers out there. And they're kicking tires.
Which is great.
And if they start buying, then inventory is going to go down. And when supply goes down and demand goes up, prices go up.
Right. So now you're going to lose some of your advantage.
Or all of it. That's the thing,
Because the rates will be going down, but the price is going up, and then there goes any spread that you may have had.
It used to be if you wanted to be obnoxious at a cocktail party, you'd brag about how little you paid for your home. But lately it's, I got a 3 and change mortgage, aren't 3%, I the best?
3%, I'm going to brag to the cows. I have 3%.
You're not allowed to brag on my show.
I sit on that like a little nest. I'm not leaving, ever. 3%, why would I go anywhere? I get calls all the time. I get cards in the mail, and I get calls constantly. Hi, are you interested in selling? No. Nope.
Well, you should make sure you're on the do not call list because they're not supposed to be able to call you. We still have that list, by the way.
Do we? I asked them not to call. I still get the calls.
Well, that's why you...
Listen, unless they want to pay for the basement renovation, I'm perfectly fine with that. And they can volunteer that, and then maybe I'll think about selling.
Well, just don't ask me for the money because,
Just tell me what I have to say to make sure I stay employed so I can pay for said basement renovation.
I'll send you an email.
Excellent. I look forward to not reading that.
Oh, see. On my own show. Can you believe this?
Yeah.
All right. So, again, the timing, like Lisa said, timing any purchase is a dicey situation. You could miss out on the home that's perfect for you. The prices could go up while you're waiting. Rates could flatten out and go up a little bit. Remember, the market is incredibly sensitive to any economic data that comes out. And you saw that little bit of panic on Wednesday when the core CPI was a little higher than expected. People are like, oh, no, this means you're not going to get a bigger rate cut as we like. But timing a home purchase when you don't have data, like you do for, say, stocks, where you have data going back 100 years. You can look up anything. And they can't time it. People get paid a lot of money to tell you when to buy or sell a stock, and they don't get it right. So in areas where maybe only 50 or 100 homes sell in a month, like how are you going to get enough data and timely data to be able to say this is the exact time to buy? Just if you have to pick between the two, you can't change the price you buy the home at.
No, but the rate is where you have your options.
Right. All right. So last week was good, and stocks had a really good week. The S&P 500 was up 4%.
As soon as they settled themselves down.
Well, once they calm down, they're either way too happy or way too mad. Kind of like Jet fans. And the NASDAQ was up 5.9%. Those are the best weeks for each of those indices. Indices? Yeah, right.
I think so.
Or indexes? It doesn't matter. This isn't an English class, right? This is economics or economics. We don't even know how to say what we do. Right? I always say economics sometimes because you call it econ for short. You don't call it econ, right?
No, econ. But then I always say economics. That's, I don't know, habit.
I don't know, whatever. And the S&P 500 now is just 1% below its record level that it set in July. So very happy right now. They're getting ready. They've booked the catering hall. They got the balloons for the rate cut party. They got extra balloons on hold in case it's 50 basis points. So...
But don't you think they're building in, knowing all of this data, that it really isn't going to be the 50 basis points?
There are some major banks saying they expect 50. So let's...
Still? Even with all the news that we've gotten, still?
Yeah. All right, so let's get to the Fed meeting. It is this week. On Wednesday, they'll have their announcement. And, again, the odds, the latest odds as of this morning on Monday was basically 60 some odd % chance of a 25 basis point cut. I don't think you can rule out 50. Obviously, the retail sales shows weakness that could lead them to think about it, come out running. If you're going to get there, it was like when they were hiking rates to get inflation down. You might as well go, there's a good argument to say go big in the beginning.
Right, yeah.
Especially with the lag time. Or you could say, well, you don't have to go big because you could just keep doing it.
And didn't was it the European banks, didn't they just cut?
They just cut again.
Yeah,
they're a little ahead of us.
No, I don't know, but didn't they do the bigger cut?
No, 25.
They did 25?
Unless I'm misremembering.
Maybe I'm misremembering.
We'll see. We'll tell you who was right next week on the show. So they Reuters did poll some economists. This is before the inflation data came out. And the majority of them said they expect a 25 basis point cut at each of the last three meetings. So there's one in September, October, and December. So, how they get there, I don't know if it's going to matter as much. If they did 50 and then 25 and then took a month off, or if they did 3 25s, or you can think of all the combinations. All right, so what are the reasons to pick one versus the other? Well, let's start with 50 basis points. You're going to cut more than 0.25%. You're going to do that because you want to get rates, back down to a more normalized range because obviously they're high for the most recent economies that we've seen. Again, It's like mortgage rates. When you say 6.2 mortgage rate is high, when it's a 1.5% lower than the average over the last 50 years, you're not being correct. But in recent memory, we're a little high, being over 5%. So if you're going to get down there anyway, let's get it started. I'm one of those guys when I'm driving, I don't want to stop. I just want to get there. That's why we don't take breaks in between the commercials and the podcast. We want to get this over with because it's lunchtime when we finish. So why not do it now? The other reason is the labor market data on the surface looks okay, but we keep seeing these massive downward revisions, which is concerning.
Every month.
Right.
And not small.
And number of job openings is coming down. Retail sales, again, could be a huge changer when it comes out on day one of their meeting tomorrow on Tuesday. We'll see, because if the consumer is showing more weakness, this rate cut can help them almost right away by lowering credit card rates and any revolving lines of credits that they have. So, I think that those are the big arguments you can make. The labor market has been keeping us out of the recession. If it's nowhere near as strong as we thought it was, which the benchmark revisions for the 12 months ending March.
That's scary.
818,000 jobs gone like that. Who knew economists could screw up that much? Not us, of course.
No, never.
And the reasons to go 25, I could say, well, the labor market still, your unemployment rate is comfortably below 5%. You're still adding jobs, no matter how you count them. They may be getting them wrong each month, but you're still adding them. The weekly claims for unemployment aren't particularly high. Consumers have still been spending. So companies are still earning money. What's your rush? Also another reason to go 50 that I would point out is that they are probably overstating inflation because of the crazy way they calculate housing, which is in 6-month increments. They should find a way to touch base with their sample sets more frequently.
Because that number could be lower than we think it is.
Yeah. I mean, that's the thing. And we always say it's troubling when core inflation is higher than headline inflation because core inflation takes longer to come down. We see energy prices can drop like a stone, right? But food and housing prices, not so much. Another thing too, the Fed usually doesn't start cutting rates when the economy is still decent, which it is today. I mean, any way you slice it, you can be pessimistic. And, I keep getting asked, and a lot of people send comments into the blog, like, as a Fed, you're going to admit the Fed has reached its soft landing yet? No, because they haven't.
Yeah, because we're not at the 2% that they
have
designated.
That's a more dynamic thing. Like, you just got to get it near. It's hand grenades, right? You just got to get near. I think that, in history, Alan Blinder, the famous economist, just did a paper on this to say, like, how many times has the Fed actually achieved a soft landing? And most people agree that it's only happened once, and that was in 1995. Some of them have been kind of soft, but most of them have been hard landing when the Fed has been trying to get inflation down, because it's very hard to slow the economy down just enough to get inflation down without causing recession. So we can't spike the football yet because we have to get to that, closer to that 2% number, a little bit closer, and we have to see sustained growth, probably for 6 months or so before we can pat Jerome Powell and everybody on the back. An important thing will come out of the meeting also, which is their summary of economic projections. They do this a couple times a year, where they talk about GDP and employment, but that's not what's important in there. What's important in there is something called the dot plot, which is basically their expectations of the federal funds rate for the next 3 years. So that is their way of trying to set expectations to how many cuts you're going to see through the end of this year and in 25 and 26. It seldom holds exactly as planned. So, but I think the Fed always wants to prepare people for the news. They don't want shock because that
you want to try to manage the expectations.
And some people's expectations are kind of out of whack.
Well, if they can try to manage those expectations, get a little bit more of a realistic picture of where things can and should go.
Right. And again, in the old days, Fed used to say nothing. Here's your rates. Take it or leave it. We don't care.
Thank
you. Got nothing and like it.
Bye. Going to lunch.
Now it's got you have a press conference, which even I can't get through more than 10 minutes of without changing the channel or falling asleep. So we'll see what happens. It's going to, I don't think there's ever been, certainly in the last 20 years, I can't think of any other time where people were more glued to the Fed. Even during the financial crisis, that wasn't about we need to cut rates to get the economy going. That was we need to save the banking system, and
financial
and the mortgage
collapse.
market. But here rates are such a huge part of it. And again, the Fed got us into this mess. So hopefully they can get us out. And the money supply is growing again. Now it's down from its peak. But again, it's something the Fed never talks about. Too much money chasing not enough goods, Jerome Powell. Talk about it, okay? Acknowledge that you look at it. Because changing a rate that nobody uses by itself doesn't get inflation down. Taking money out of the economy. So when they do the quantitative tightening or easing, they're actually actively buying or selling their securities. That will take money out of the economy. But just merely lowering a rate doesn't get it done. So it'll be an interesting week. We'll be back on Monday. Yes. We'll have Scott Nadler here to really talk about it and how this impacts the housing market and if he's happy and if I'm happy. Who knows? I mean, Jets play Thursday this week, right? So
yeah, Thursday night.
Anything anything can happen.
Well, so hopefully, no matter what happens, you'll be happy come Monday.
And I'm not a happy guy by nature, right?
Mm-hmm.
So there's a reason they call it a grumpy old man, because I try to expect nothing from the Jets, and look, the Yankees have the best record in the American League.
Oh.
So that's what I'm focusing on.
Listen, my Mets are holding on, okay?
Yeah, okay. Good luck with that.
But we're holding on.
If the Yankees disappoint and the Jets perpetually disappoint, it's hockey and basketball season really soon. And the Rangers had the best record in the league last year, went to the conference finals. The Knicks look very promising. So I just throw, there's always
sports for you to watch, in other words.
They always say there's always next year. Well, for a real sports fan, there's next sport.
Yeah.
And you just go say, all right, forget about baseball. It's over. Let's move on. And the problem is such a long season. You put a lot into it, and then when it's over, it's terrible.
I cry a little every October. It's okay.
You should cry a lot. You're a Met fan. Whereas Yankees,
but we cling to the hope. Every year we cling to the hope.
Why?
Because I've been at some of the games, and you've watched some of the most spectacular plays you've ever seen in your life, and then go, but how did we lose that game? I don't understand.
Well, you went from...
the errant throws that you watch go...
Andy Chavez, right?
I was at that game.
Ever, to an Adam Wainwright curveball.
Okay, but you can't blame Beltran. Everybody keeps trying to blame Beltran. Anybody would have stood there and froze with that. It's Adam Wainwright. Of course you're going to stand there and go, okay, what was that?
Just think of it's like the Billy Joel song. It's either sadness or euphoria.
Yeah, well,
I
live somewhere in between with my teams.
Trust me, the Jets behave the same way. Forgot my shout out to our good friends at Canaletto. All guests of the show receive lunch. Compliments of my good buddies over there, Elvis and the crew. Phenomenal.
We'll see him in a few.
At 208 East 60th Street, serving the best Italian cuisine in Manhattan since 1998. Make sure you tell them I sent you, but don't ask for my table at lunchtime. You're not getting it. It's roped off. I got to have my privacy.
Oh, okay.
Well, I have a little nook. I like to hide it to avoid the air conditioning because I'm old like that. But anyhow, thanks, Lisa Ray, for being here, and Ray and Lena, and most importantly, thanks to our sponsors and you, the viewers and listeners, because we really love doing this. And if you want to send any comments, just remember it's ctl@bhsusa.com. Have a great week, and don't let the Fed make you crazy. See you on Monday.
Bye.